Reserve Bank of India now seems to be, going through at the books of all the startups that are offering peer-to-peer lending. Essentially, after cracking down on apps that were giving easy loans, it appears that the regulator here is now cracking down on companies that may be facilitating peer-to-peer lending, may not be complying with all the regulations, all the norms in the books, Abhijit.
Yeah, absolutely, Shweta. I mean, we have seen just in the past, and Google was in the news all over the papers, that how they have made stringent on online lending, direct lending, and these actually opened up a can of worms, as you know, and most of the apps have vanished over the last few weeks, if you have noticed. Now, the same thing RBI might be, they have actually touched upon a very, if I may say so, unregulated part of the economy. It's growing. It's growing very fast. Riding the internet boom. But the point is, how many of them actually comply? So this is an area which RBI couldn't have come in at a better time. In fact, they could have, if they have touched upon it earlier, I think they would have done it better, because this way a lot of NPS can build into the system, which are actually invisible to the naked eye right now. If you check the accounts of banks or even NBFCs, you can see them. But this sort of lending, you never know how it takes place, who gives it to whom, and it almost takes place in an invisible manner, I think. Shweta, we have to look out for this, but I'm not very sure how things are going to shape up. But the RBI's concern is 100% genuine, and it should have come perhaps even a bit early, Shweta, I think. I would like to hear the views of two of my colleagues here, because this is really unfolding at quite at an early stage now.
Okay.
Krishna is smiling. Yeah, I think. Yeah,
interesting inputs there. This could potentially lead to greater NPAs, and this is where RBI needs to be focusing right now. What RBI is looking at, Krishna, and what we're given to understand on the basis of the news reports that are out, that they are looking at a flow of money. Where's the money coming from? Where is it going? The risk assessment, the partnership models, essentially, how does the peer-to-peer lending works? I want to understand from you, and for the benefit of our viewers, what is the concern around peer-to-peer lending?
Also, Shweta, just a moment, money laundering. I think that will be another area of concern, money laundering.
Money laundering. Interesting. Krishna?
Fair enough. Wherever this flow of money is concerned, Abhijit, I guess we'll have to talk about, there has been an eye on money laundering. It could be any way. That's the same thing that happened with all the loan apps. Remember, Shweta, we're talking about 275 Chinese loan apps, digital loan providers apps that are already under the scanner we've been speaking about already. This is just taking it a bit further, because this is about P2P lending, which is peer-to-peer lending, which means there is no financial institution even that is, specifically speaking, that is, doing the lending. You're talking about a company, a startup, which coordinates with another consumer-facing app. For example, BharatPe, Jupiter, and Cred are among the major consumer-focused applications with which some of the famous peer-to-peer lending apps. Let me name a couple of these famous P2P lending apps. Liqui Loans, Lane Dane Club. These are some of the most famous P2P loan apps, and they have built partnerships with BharatPe, with Cred, with Jupiter, and the RBI now wants to understand what is this partnership all about. Are BharatPe, Cred, and Jupiter doing enough to make sure that the startup at the time with all that processes are clear? So the RBI wants to nip things off in the bud right from where it begins. You have a P2P lending app which ties up with a consumer-facing app like Cred or Jupiter or BharatPe and gives out loans. And how, from where the money comes and how it goes through to BharatPe, because BharatPe will turn around and say, this is not my money, it is coming through some other startup. You have to go check with the startup. And you go check with the startup. No, I at the end of the day sold it through BharatPe. So please check with BharatPe. So, the consumer is left left high and dry. The consumer is the one, the person taking the loan is the one who's under maximum amount of trouble. So in that sense, they want to plug the leak, plug the issues anywhere it could possibly be, and check the system. It's largely gone unregulated. That is the problem over here. And through the pandemic, you're seeing the need and for cash, immediate cash, which needs to be coming in as a loan, increasing with every passing day. Young people, people from 20, 25 years of age taking loans online without too much knowledge about what these apps are. What is Lane Dane? To people who take loans from Lane Dane Club, beg your pardon. The name of this app is Lane Dane Club, a P2P lending app. Do kids 20, 25 years of age who are taking loans from Lane Dane Club know what the Lane Dane Club is all about? Do they know what Liqui Loans, another P2P app, do they know who's Liqui Loans, who owns Liqui Loans, all about? So it is essentially an awareness and awakening that this exists. First of all, most people don't even understand what is P2P lending. The RBI has identified P2P lending, the mushrooming and the growth of P2P lending. Now it wants to make sure that it's regulated properly and doesn't go the Chinese loan app scam way.
Absolutely. And before I go to my colleague Amit here, I want to come to you, Abhijit. There is a growing underlying concern, and that is with respect to RBI also trying to crack down on the fact that many sections of the society, especially underprivileged, going for these P2P platform where you have a lender who charges exorbitant price and exorbitant interest rates, and they are the ones who are governing the disbursal, the collection, the evaluation process. So overall, there needs to be more oversight on the debt market.
Absolutely, absolutely. This is almost going back to the Shylock days digitally. I mean, the bottom of the pyramid is definitely more vulnerable to these sort of pressures than the urban educated middle class perhaps, who have two lines of defense. One is knowledge. You actually have a second look as to who are you taking from, what are the terms, and in case of default, how does the lender react? So perhaps you are looking through all this, and then again you are trying to reevaluate before taking the loan. But what about the bottom of the pyramid? They have everything at the click of their button, and they don't know anything beyond that click. They'll just click, get into the trap, and then perhaps lose everything what they have. So it's definitely all these oversight, all these regulations need to be strictly enforced. That's very simple, because with the digitization of the economy, the need for regulation has perhaps increased rather than decreased. The digitization doesn't mean that there are informed borrowers. This is very crucial. In fact, it can mean that there are more casual borrowers rather than informed borrowers, because everything is so easy, everything is so accessible. So if the RBI thinks that it's going to, subject it to this segment to further regulation, more intense regulation, and more intense crackdown, it's, I think, all the more welcome.
Absolutely. Absolutely. And Amit, what we're looking at essentially here is a startup, which is a P2P startup that does not really do anything more than facilitating a lender and a borrower to transact with one another, and therefore takes no responsibility either for the lender or for the borrower. All in all, it is not a fail-safe situation. It's a situation where both the borrower and the lender are to lose if the the intermediary says there's nothing more that we can do. There's no other responsibility that we'd like to shoulder.
I think Avijit nailed it on the head when he said going back to Shylock days. This is the flip side of simplicity. Going to a bank, people have the idea that you have to fill a whole lot of forms and all that. These startups are providing that simplicity. The flip side of it is you are getting the money, but the pound of flesh is the difficult part.
Right.
And that is where and startup is in India, they have basically mushroomed so many that the laws are basically, there is a time gap. So they are basically just catching up, and I think the RBI, what it is doing, it is very necessary right now to basically nip the further problems that these kinds of basically transactions may pose. The facility that the startups are providing is very, very good. Simplicity is always good. But the flip side, that is what I think it is necessary the RBI should take care of, and it is.
RBI is trying to nip it in the bud before it becomes a bigger problem, but P2P lending there, all the platforms that are facilitating, including Cred, Bharat Pay, all of them have got a questionnaire that RBI has sent out for them to fill as to what the process is, asking them to clarify on various questions. Questions have been asked and answered. We will, of course, try and get you more details on that.